Australian dollar US dollar recovery stalls below 0.69 FIFRO, with all eyes on the Iran war. Iran sets preconditions for talks on lasting peace with US, senior official tells Reuters. Senior Iranian source. Tehran has rejected any temporary ceasefire with the US.
Indian shares rebound after a weak start. IT shares lead gains. Iran rejects US temporary ceasefire proposal. Reuters.
KC40 rises. Nearly 1%. Bank stocks move higher.
Euro-pound approaches 0.0700 lows following Eurozone and UK services data.
European natural gas prices reverse course amid impending US-Iran deadline. Gold price forecast. 20-day EMA acts as key barrier ahead of Trump's deadline to Iran.
Morning bid. Final countdown. "17 months and counting. Why China's gold buying spree won't end." Eurozone Centix investor confidence at one-year low. Czech trade surplus shrinks. In February, retail sales growth eases.
DXY. Energy shock keeps dollar bid. BBH. F100 is approaching a support line that has been tested at least twice before. A final push is possible for silver US dollar as it approaches 71.5396. F100 is approaching a support line that has been tested at least twice before. A final push is possible for silver US dollar as it approaches 71.5396 DXY.
right, good morning. Hey, welcome to Forex.Today, the YouTube community. More than 21,000 foreign exchange traders, we gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! So good morning. Good to see you. So what do you want to do today? We can do, well, I mean, I guess we're just going through the routine. Are we okay with that? Yeah, well, a routine brings safety and confidence, because we need to be confident traders out there. It's hard to be successful when you're afraid all the time, right? So we will go through the sit rep report, and then we'll go through the headlines, and then we'll go through the risk radar, and then we'll look at the news on the calendar. What then? What? We'll look at the trend. We'll look at contrarian opportunities, so on and so forth. I don't know. But ultimately, and we'll go through the charts for sure. But ultimately, you're the boss, and I am a humble servant. So let me know what you want to do, and we'll cover that. We're going to use, as always, the TRADARS analytics platform to make informed, logical decisions, and then execution will be handled by Traders Way. Beautiful combination between the two. By the way, my name is Wayne. Nice to see you. Let's get an update on the situation that we're facing.
Good morning. Let us get you up to speed on the high-octane market movements as the European session opens. The market is currently experiencing a decisive strong risk-on environment marked by significant rallies in the NASDAQ and FTSE 100. This bullish momentum is tightly correlated with the rising U.S. 10-year yield at 4.335%, which is bolstering the U.S. dollar and triggering a rotation out of safe haven assets like gold. Biggest movers right now, WTI crude oil, high-yield bonds, Brent crude oil, C100, and NASDAQ 100 are up.
Damn, that's a big uplift. Interesting. So our price feeds are getting faster and faster and faster. Yesterday we implemented, or built, actually, we built our own technology to improve how fast we can get the prices. So they're coming in faster and faster. For some reason, gold. Oh, look, it just kicked in. Yeah, all right, good. So there we go. It looked like it was lagging a little bit, but I guess maybe, I don't know, whatever. It's working now. So yeah, so that's really cool. So you're going to see throughout the throughout the app or across the platform, you're going to see much faster pricing. Because we rebuilt the back end, and that's one benefit of being significantly more efficient. We can pull the data that much more quickly. Let's get an update on the headlines that have come through in the last few minutes. Oh, I guess I have to turn the mic on. Huh?
Oil. War risk and supply headlines support prices. Commerzbank. XM launches unlimited cashback promo, rewarding traders in 2026.
Investing Live European FX News Wrap. Tehran rejects ceasefire. Iran's infrastructure hit. Australian dollar. Energy shock threatens fragile consumption. TD Securities. F100 is approaching a support line that has been tested at least twice before. A final push is possible for silver US dollar as it approaches 71.5396. DXY. Energy shock keeps dollar bid. BBH.
Eurozone Centix investor confidence at 1-year low.
Cool. Now remember, since we're so hypersensitive to headline news over fundamentals and technicals, remember that like everything can change with one tweet or one headline that Iran has accepted a ceasefire, or a bridge was blown up, or whatever. Just everything could be good and just instantly change. So be careful today, and remember 8 p.m. there's an ultimatum out there, so you're going to want to hedge that risk, or at the very least trade a lot smaller today maybe that you normally would. I mean, you should practice being risk averse like a professional. I think you want to trade more and more like a professional and less like a retail trader. So what would a professional be focused on today? And massive risk. Risk should outweigh any reward. Reward is a function of risk, and risk is bad. And so today, I don't think you want to try to get rich quick, do you? So just realize any second, and you're like, well, Wayne, it could always be that way. Yeah, well, this is a special circumstance in which we are at war, and there is an ultimatum out there. There is a line in the sand. So I don't know, maybe we'll be blessed with peace. Great. I'd love it. That'd be great. That's usually not how wars work. There's not a lot of peace in war, and they're very difficult to stop because if you kill all my cousins, I'm going to kill all your cousins kind of thing. It's hard to stop. So, but whatever. Like, look, it's out there. So trade normality as much as you can, but just realize there's a lot of anything can change. Anything can change. Like like the Squawk Box, our last piece of news was
Silver
6
price
minutes ago.
forecasts.
Oh, well,
Silver
1 minute
US
ago.
dollar drifts below 72 tons with all eyes on Iran's war.
Okay, so that to me is a risk-off move. But see, that just came out in 1 minute. 1 minute ago, right? It just came out. So anything can change. This is probably why you want to use a Squawk Box, because anything could change at any second, and you'll want to know. And our free Squawk Box will keep you up to date. And just a heads up, and you probably know this, but you can launch our Squawk Box and then minimize it. And while you're trading, you can just listen to the news without taking your eyes off the charts, but always be informed. That's awesome. Yeah, it is awesome. So things are not terrible right now, and that we've had a lot of improvement. And notice that the improvement occurred right on April 1st, right at the end of the first quarter. And this is what we had been planning on. And yeah, we have a war going on, and things are not really much better. But if you look like over here, like the overall assessment, right, near the end of the quarter, we had negative 11, and we jumped to plus 8, plus 7.5. And that's seasonal, which is really fascinating, isn't it? You're like, so is the war improving? No, or is the market just betting? Now, remember, I've explained many times that a lot of the downward moves we see in seasonality has to do with portfolio construction and management and taxation and earnings. There's a lot in there that have nothing to do with the war. And then, so the war's going on. And when you listen to the media, they say, oh, it's the war, it's the war. Trump said this tweet did that. Iran sent that drone, and all this is going on. How many tankers got through the Strait of Hormuz? And then you look at the market, and the way I read it, because we have the data, so far, nothing unusual is happening. Like, we have a war, 20% of the world's energy was taken offline, and for the first 6 weeks, or I guess, sorry, more like the first 4 weeks of the war, the S&P 500 was down 5%. And then, at a time when it probably should have been anyways. And then it dropped 10%. But, technically, fundamentally, and seasonally, all of that was like perfect, right? Like, look at the Dow, for example, fulfilling our plan. Like, this is perfectly seasonal and fundamental and has nothing to do with the war. Nothing. Same thing with Nazi here, right? Let me back out. Okay. If I was doing this seasonally, example, maybe I need to go daily on this one. Yeah. How would I, we already have it, can you see? It's all pre-planned. That would predict this by the end of the year. Okay. How do I know that? Well, I don't know that. Why do I think that? Well, that's just what the chart says. So then why use that kind of lens? Well, I have data on traders analytics on things like the probability of a move like that, the rationale of the move like that, the seasonal move, which is part of the probability, seasonality helps you answer the question, if it's going to go up, when does it usually go up? See, so I look at this and I'm like, there's nothing random here, and I barely see the war in Iran in the data. So if you don't have the data, what happens is it looks like total chaos, and it's all about the war, and I have the data and I barely see it now. Now, maybe things will change, and likely when we start getting inflationary data, we're going to start seeing high gasoline prices, right? And then maybe, then we'll see a slowing of GDP and all that kind of stuff. And it'll start to creep in. But as far as the behavior of this market, and I mean by market, I mean the global financial system. So far, nothing really unusual has happened. And I want you to know that so that you don't freak out. Okay? Oh, right on, Brian. Yeah, and Meta set up hers yesterday, and Meta held I don't know if, because it hasn't been promoted, I don't know how many people know of these additional webinars again. But let's work on that. We'll get the word out once you got it scheduled. I'll hook it up, man. I'll hook everybody up. So anywho, yeah, so this is good. I guess another way of saying this is that I don't see panic in the market at the moment. Yeah. And when you look at like these charts here, you know, that would have been the assumption 4 months ago, 5 months ago. Like, you should know that. That's all I'm saying. You should know that. And you're like, well, how would I know that? Well, it's all in TRADARS, and we draw it for you. Like, it's just there. Cool. So we got a lot of PMIs, bro. Yeah. So the reason we track this dairy, and I've been teaching this for 12 years, 14 years, I can't remember, a long time, 10 years for sure, that there is quite an impact in global dairy prices, and the Kiwi dollar. Yeah, it's so, yeah, it's got to be more than 10 years ago. I believe 10 years ago, I did a speech in Dubai at the Forex Trading Expo in Dubai, and I said how to trade gold, oil, and sheep. And you're like, sheep don't make milk. No. I guess maybe they don't, but I was talking about Kiwi dollar, and so I showed many different ways. Okay, hang on. Fonterra, right? Fonterra global dairy. Let me pull it up. Yeah, here it is. This reminds me of my old Porsche. The black and the lime green. All right. That's funny. It didn't draw it quite right. Right. I'll refresh it. There we go. Okay. Cool. So this is the price of dairy. So this comes out every 2 weeks, and that's what's coming up in 1 hour and 10 minutes. Okay. So this updates, and it shows the price of things like lactose at $1,450. I find that intolerable. Wah, wah, wah. You know what lactose is? Sugar. That's it. It's sugar derived from milk fat. Yeah. So if you're lactose intolerant, get your A1C pulled by your doctor because you might got the diabetes. I got the diabetes at the Walmart. Yeah. And so anyways, androgynous milk anhydrous androgynous anhydrous milk fat. Okay. So anyways, here's the prices. And so right now we know the Kiwi dollar is struggling, right? And typically the Kiwi dollar is not struggling with these prices going up. The prices have been going up for a while, since the beginning of the year. Here's the old collapse. May, June, July, down. But, okay, here's January, February, March, it's been up. So there we go. It's not so bad. There we go. So, yeah, so we've had inflation in dairy in general. So it's the index, right? So they take all these and then they make an index of it. And then you can track the price of dairy globally. Now you're like, you know, you might not fully appreciate what's going on here. Like, what are all these? Well, we tend to eat a lot in the western or in the northern hemisphere, I guess. In OECD countries, in rich countries, we tend to eat a lot. Have you been to America? We eat a lot. And this goes into all your packaged food at the grocery store. This goes into all your fast food, right? So McDonald's doesn't crack open eggs to make you what do they have? An egg McMuffin. No, that comes in industrial form, and things like milk that goes into that recipe, that comes in powdered form, in industrial form, right? Like you don't have a carton of eggs and a carton of milk and you're making scrambled eggs, right? So this goes into almost everything you eat. Yeah. Yeah. So, anyways, so this is your milk and your cheese and your butter in all its glorious forms. And we tend to eat a lot. And so high food prices matter. And this goes in there. Now, speaking about eggs, you probably have noticed in the United States, egg prices have dropped by 50%. Yeah. What's going on there? Well, we had bird flu not long ago. And so lots of hens became chicken McNuggets. And now I guess we're past that. And we got new hens. We got happy hens. And yeah, so eggs are good again. We're good. Supply back up, price down. But so, anyways, we going back to it's this that used to track pretty reasonably close, not exact, but it was a reasonable guide for Kiwi dollar. And maybe that's not happening anymore. But anyways, this is why we track that news. Now we can go to fundamentals, currency index, and actually look at that. Not bad. So today, Kiwi's done all right. Over the last week, Kiwi is a dog with fleas. Over the last 30 days, it's an old dog with fleas. So this correlation doesn't seem to be as good as it used to be. Hey, do you like this that I built it for you? Yeah, I think I'll move it though to the sentiment tab because we have some things over on the sentiment tab that should be under fundamental. So obviously bond and seasonality should be fundamental, but then I think I can move the currency indice over. Oh yeah, that's right. Yes, Jim. Yeah. I'm going to try earlier. I think earlier is better for most. And so I'm moving from 8 to maybe 7:30 and maybe 7, but I don't know. Yeah. Trying to figure it out. Yeah. Trying to tweak until we can squeeze all the lemonade out of the lemon. So anyway, so I'll move things around. Things are slightly out of order only because this is a complete different platform. Now, it looks exactly the same, but it's been rebuilt from scratch. And at the very bottom, you'll see this is TRADARS 2.5. And now it's working quite well. Quite well. I'm very happy. Yeah, Jim. We in yesterday's 4 o'clock meeting, we discussed it as a group, and people are like, JGB, for example, he's like, yeah, man, that's way better. I'm like, okay. Now, the webinar software company that provides that technology, in one iteration, it would record, but then not give us the recording. And so then we worked with them to re-implement a completely new pipeline. And now it won't even record. And I'm just ripping my hair out. And support keeps saying, well, it should work. And I'm like, I know it should. And then they keep going back to the default nonsense, which is just totally support. They're like, oh, hey, well, this thing is turned off. I know it's turned off. It's not supposed to be turned off. When I manually turn it on, it still doesn't work, and you are still not doing the job to figure out why. So, yeah. So anyways, my plan today, this is part of my plan for today. I'm going to delete all my existing webinars and rebuild them all because Meta got hers up and running, no problem, and it records no problem. And so I think when I built my webinar schedule, the webinar company's platform failed and then set up all my webinars wrong, and they can't supersede whatever. So I'll break it down, rebuild them, whatever. Well, we definitely missed you, Jim. We noticed you weren't there, right? Like the song, I forget how it goes, but it's like, I want you to notice when I'm not around. There's JGB. Yeah. Hey, JGB, we started earlier today for you. Sounds like, actually, yesterday, unfortunately, yesterday wouldn't record, so that's why today I'm going to rebuild it. So we're past all of that. But yesterday I was out of my home office. I have a new office, so I have a home office and an office. So now I'm trying to figure out how to go back and forth because I'm doing some more new charitable work, and an office is required for that. I'll get into that later because it's not publicly announced yet. But anyway, so I have an office, and I'm trying to figure out, can I host webinars there too, and not just here, and how do I go back and forth? So anyway, so yesterday I did my internal TRADARS webinar inside of a soundproof booth, which was kind of funny. And I didn't really plan the day out to go that way, but that's just how it worked. I'm like, oh my God, I'm not going to be able to get home in time to do my 4 o'clock. So I'm like, I got to do my 4 o'clock here. So anyways, didn't want to do it from my office. So I'm like, oh, we have the soundproof booth. So I go and I do it from in there. But now I got my laptop, and usually, I'm doing my trading and everything I do primarily off of, the rig behind me or the rig in front of me. But anyway, so I got my laptop, and I go to like this page, And we're doing our technical analysis yesterday, Jim, for day trading, swing trading, position trading. We went through them all. But I'm in this tiny little booth and I got my laptop up. And for some reason, it was just easier for me to navigate with the touch screen instead of the mouse. And it was awesome. Oh my God. Because like I could just do like this. I could just zoom in on one particular chart, like really get in there. And it was so easy. And we're talking about this dotted line, like, and all of a sudden, my heart just filled with joy. Like I don't know, a birth of a new child. Like suddenly I realized, because 2.5 is new and I launched it, and then there were some wrinkles to iron out, and there still are, but it's 99% perfect. But all of a sudden it just really, 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 really hit me how amazing this is, because in about 1 minute we found like 4 trades with 300 or more pips in the logical future. And we were just able to zoom in into these things and like, oh, that totally makes sense. Like, just like, it's right there. And then I could so see how manually I have to do it this way. So I might want to start doing all these live streams from my laptop, which means I need to buy a better laptop because it's getting old. But anyway, so then what I did, Jim, is I went, oh my God, I need more. I was like Neo learning jujitsu, right? I want more. So all of a sudden I turn on every pair, and all of a sudden I'm pulling up trade opportunities on currency pairs that I would never have even looked at or considered. But now I have all the data and it's just so easy. I'm seeing stuff that I just wouldn't have noticed. Like, chow. Shut the back door. And I'm looking at Euro Kiwi. Yeah, we're that kind of stuff. Like, whoa. Yeah. Whoa. I love it. Yeah. So I don't know if I can get a touch screen for my desktop. Suddenly I want one, but I have this is a 49 inches wide and I don't know, 18 inches tall. I don't think I can get one of these with touchscreen, but I kind of like it. But yeah, it was so good. I mean, I know I built it, but the use case just got so good. Oh my God, it was so good. Yeah. Yeah, so we look at the prices updating so quickly. Look at that. Boop, 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 boop. So good. So good. Anyways, go back. Risk was okay. We looked at the dairy auction coming out. Now we have Canadian PMI in a couple of hours. Cool. I got to work on this a little better. It's good. It's got a lot of potential. And so I'm going to make this so good. Mm-hmm. All right. 2 ways of using this, as you know. Dollar strong, dollar strong, dollar strong, dollar strong, dollar strong. And when we looked at the indices that I just showed you under fundamentals, we know like Kiwi is weak, for example. So you should know that this is what's going on. Okay? Long term, medium term, short term, bearish, bearish, bearish. Yeah. Isn't this nice? So, this is so good. Okay, this trend analysis goes on to the charts. This is why I'm really, really, really loving this stuff. So, what does the trend radar say? Very bearish. Cool, it's right there. So now when you're looking at this chart, and I can control plus, okay? When you look at this chart, it is calculating for you daily and weekly pivot points, MACD, moving averages, price action, technical or statistical trends on 3 time frames, and all the fundamentals. Things like seasonality and how well, and our score, okay, our score when comparing the British economy to the U.S. economy. Because that gets done somewhere else on the site. So we're comparing the British economy to the U.S. economy based on their macroeconomic data. Bias is bearish. The technical trend is the statistical analysis of price action on 3 time frames, weighted and then aggregated into bearish, very bullish, very bullish, or neutral by measuring the slope of the mean and the standard deviation of the slope of the mean on 3 time frames. And that's how we get trend. And then when we look at the chart, we are looking at past performance plus future projections. So I need to change these little cards. They get in the way, right? It's hard to see the projection. So maybe we can have them on the right side of the chart instead of the left. Okay, fine. But it's doing all of that. So in one, like think of it this way. In a second or two, I can look at the British pound versus US dollar and get the same amount of information that would have taken me 20 minutes to find and think about. I am now down. I've gone from like 20 minutes. For me, really, think about it. It was what I did. I would go through and I would study the fundamentals of the UK and the fundamentals of the dollar, and then I would manually compare the two to decide, well, am I bullish or bearish on pound dollar? You see? And then I would look at the daily chart, the 4-hour chart, the 1-hour chart, the 15-minute chart, all that kind of stuff. And I'd look at them, and this one is up, and this one is down, and this one is sideways. And I'd make judgment calls of how to put that together. Well, on the long run, it's down, but in the last couple of hours, it's up. What should I do? So I'd have to go through 2, 3, 4 different charts and then deal with the fact that sometimes on some charts it's up and some charts it's down. I'm only looking at pound dollar or euro dollar, whatever I'm looking at, but I got to look at it on 5 different time frames and decide, well, am I short-term long or long-term short? And then once I made a decision there, I would say, well, I guess I'm going to try buying a dip, or in this case, selling a rip. I guess I'll sell a rip somewhere around the moving averages, role reversal type thing. And now all of that takes 3 seconds because it's already here. Boom, boom, boom. It's all there. It's all right there. Wow, huh? Yeah. So that's when I was freaking out because it's working exactly the way I want it to. And it's amazing because I know how much work that used to take because I did all that work all the time. It took a lot of time. Took a lot of time. And then, dude, for crypto, yeah. Wowzer. So there's Bitcoin. So anyways. Cool. So when we talked about scoring, it came from here. I think I would like to see more of the colors. I think it's only doing the colors. It, meaning Aiden. Sorry, Aiden. If it's greater than 1 or less than 1. But I want these zeros to stand out more so that I could say, well, why the heck doesn't he have GDP for Japan? Let's work on that, right? Why the heck does he not have this GDP? So maybe a softer green and a softer red. Yeah. Lots of things neutral, but most of the data is there. Very cool. So how to read this? It's comparing Australia to New Zealand economies. GDP versus GDP, inflation versus inflation, job versus jobs, rates versus rates. This is actually from the trend radar, reading the trend on 3 different time frames. This is reading the seasonality of Aussie Kiwi. What does Aussie Kiwi usually do this time of year? Go up a fair bit. Okay. Funds come from the COT report. Beautiful, right? Comparing capital stock and flow of Australia, because there is no Aussie Kiwi COT report. So now we're comparing the capital stock and capital flow, so long-term positioning of institutional investors with short-term flow in those positions of institutional investors, and then comparing the two together to find out, is the money going into Australia or into New Zealand? It's very much going into more is going into Australia. So it's a combination. Money is probably flowing out because this is the most extreme bullish. Money is probably flowing out of New Zealand and into Australia. So when you look at all that data, that's our biggest score. But then you drill into it, and this is the comparative analysis, right? So when you compare Aussie versus Kiwi based on institutional positioning, 45% more long Aussie than Kiwi. Seasonally, Aussie Kiwi, as you already saw in the score, is usually up. May is a little bit of a down, and then June is another up, much bigger than even the April up. So there's a rally, some profit taking, and a new rally. And that knowledge goes into our scoring. You look at COT, you look at seasonality, you look at trend, you look at momentum, right? And now we're started calculating, right? We started calculating retail sentiment, non-institutional sentiment. And we do have the numbers. Okay. Let me get my snipping, my Epic. I guess it's Epic. Let me get my Epic. So you take the total number of contracts minus hedgers minus speculators. I'll just put spec. And then what? It equals 0, right? Wrong. You get a new number. People that are long and short contracts, but they're not hedgers and they're not speculators. You're like, well, then what are they? Well, they are, right? They're not hedgers because they're non-commercial, meaning very few people hedge if they are not in the business of hedging, right? So what it is they're not large institutional investors that are required to report their positions to the government because the positions are so big. So they're small speculative investors, which is you. So you can derive my drawing. You can derive this information, huh? So now, what you want to look for is you want to look in seasonality and say, well, there's a peak, a 6-week peak. When does that occur? Well, maybe when institutional investors start taking profit. So now you might want to look at a chart like this and say, where is the institutional target? Like monthly M4, monthly R2, or if it's an extreme market, monthly R3, or is there an annual pivot? Are we coming into the annual R1 or annual M4? Okay, so you look at the big numbers, the big picture, but because you already know seasonality, so you can anticipate. Let's put it this way. Because you have the data, you can anticipate that there is going to be a top. Now, we don't know this to be true, but you can anticipate based on what the data says. The data says is there's a high probability that Aussie Kiwi peaks somewhere in April and falls for weeks and weeks and weeks and weeks and weeks. There's a peak coming. So if it double topped here, what does that mean to you? Well, even though it's early in April, we know somewhere by April and into May that they'll be down there. And then somewhere in May, again, anticipation, somewhere in May, there's a valley. And then up. Now, what about June? Is June a peak? Well, I decided instead of putting the whole year there, because we have seasonality tools, I just want to know this month and the next 2 months, because this is actually what I'm trying to see, the shape. So where's my tool? Where's my drawing tool? So you can anticipate, Okay, this is an up month, so higher than last month, and then down, and then up is capital flow, normality. So imagine you get like somewhere in April, this goes la, la, la. And then somewhere in May, it goes la, 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 into June and maybe all the way up to July. So that you can anticipate this move before it's even happened. And it helps you comprehend the weight of a take profit zone, a weight of a resistance zone, the weight of a potential reversal pattern. You can be ready, willing, and able. Because now it's not just another line in the sand. In this case, that line in the sand may carry more weight. And you would also know the amount of risk. So if you've been long this for months, you know that maybe you could take some of your profit here, and then maybe, around here you can get back in, and now you can make decisions of how are you going to handle the likely pullback. And you're like, well, how likely is this? Well, pull up the seasonality. We have it on TRADARS, but this is 20 years of weekly calculations. Weekly. 20 times 52. Yeah. And we break it down by 5, by 10, by 20, and a 20 EMA of this. So I'd say it's, I think it's reasonably plausible. So it helps me justify, should I bail on my entire portfolio, or should I ride it out, or should I handle it in a different way? Well, with the data, at least you can interpret and make better decisions, you see. Now, Jim, if you're still here, I definitely built this with you in mind, and you've given me lots of feedback. And I hope this is even closer to what you want and need. In particular, this fundamental section. Jim was saying he really liked the idea that he could look at the GDP between these two countries. So, or any two countries. And so now it's like GDP in Australia versus GDP in New Zealand. But then, right? I'll have to check why it looks like he's not doing it properly on bias, because he's neutral on everything. And I'm like, that doesn't make sense. But what I asked him to do is he can do his analysis of the, in this case, a comparative analysis of these two, and then give you a bias on the direction of this pair. Looks like he built it, but didn't implement that part of it. So don't worry about it. I can get that done. I reorganized it and the seasonality. I simplified the charts. We got our projections. At one point, I had these projections drawn in a card, and then I'm like, yeah, we don't need a card. Just get rid of the card and just put them on the chart. And yeah, that looks. Yeah, he should label this more, because I believe this is a 14-day projection into the future. April 19th, and today is that yesterday or today? What's today's date? The 7th. So, yeah. So these are projections weeks in advance, ladies and germs. And of course, Jim, you have this for everything. So the next best thing you could be trading is Kiwi dollar. And again, boop, boop, boop. Boop, boop. Okay, here's all your research, guys. So remember the old days? You'd have to write down what you thought about the COT report. So you'd have to pull the Kiwi and you'd have to pull the dollar. And then you'd have to write the capital stock and capital flow. And then you'd have to make a decision based on what you saw on that analysis, whether Kiwi dollar is likely to be falling or rising or be neutral based on just the COT. Remember, I did all of this all the time. And then you would look at 20 years of seasonality. What does this normally do? And so you'd read into this. Well, April's usually up and then down, and right. So as we get closer to May, this bearishness might get more bearish. But then at somewhere in May, you probably want to buy and go away, right? And you'd look at all your charts on multiple time frames, and then you do technical analysis, and then, and you want to do your fundamental bias. Whew. And all of this is like done. Just done. It's just done. I'm so happy. I'm so happy. I'm so happy. That used to take me forever. I'm going to cry. Whoa, bro. What about this, though? Is that the view you prefer? Because you're like, Wayne, I hate tables like that. Yeah. We'll pull up a chair. What do you think of that? This is the same information. Now, this looks like something else. It wasn't called the asset analysis matrix. And you're like, yeah, I didn't really use this. Well, it looks the same, but I populated it with different data. So this used to be the pure fundamental. It's a different version, but what you may remember, it looked like this, but this is different. This is now looking at this table. It is this table. So now it's not just fundamentals, it's COT report, it's seasonality, it's the charts and comparative analysis of macroeconomic data. So how do you read this? These are your best selling opportunities. These are your best buying opportunities. It's a scatter plot almost. So big shows magnitude, right? Magnitude. And Aussie Swissy, yeah. Right? It's not a good trade. I mean, let's say the chart's moving, but the macro doesn't make sense. Or the macro is moving, but the chart's not. Now, really, it's impossible for the way that they're calculated. You can't have one moving and not the other. But nonetheless, what I'm doing here is I'm scanning the entire global currency, commodity, and indice, and even some treasury assets in real time. And I can do that. I can look at the entire world of assets and go, boom, that's it. I see everything. Okay. Bitcoin. Okay. So the bigger they are, the more impact, the more interesting they are to you. It's trying to capture your attention. Okay. Aussie Kiwi, Euro Kiwi, Pound Kiwi. What do you think? Kiwi dollar. Dude, what do you think? Maybe you should be focused on Kiwi today. What do you stink about that? Yeah. Yeah, thank you, Jim. Right, King? Yeah. Or maybe you like this version better or that version better. You tell me. Okay? It's all the same. This is this, is this, is this. I created all the different views so you can get what you need. Be interesting if I if I told Aiden, look, if I click this, I want to see it open that. Huh? It's beautiful, huh? I'm thinking because I don't like having to scroll to fit it. So I'm like this. Now it doesn't fit. So now I got to scroll up. I wonder if I can just do it as a pop-up. So if I click it, it just pops up and I see the detail basically full screen, and then I can close it and go on. I think I'll do that. Yeah. Notice that we got live prices and live scoring. Oh my God. This is so good. Yeah, this is so good. All right. So the other thing, the other reason I'm so happy, like this makes my trading so much better and so much easier. Not easier to be a trader, easier to make informed decisions. Like this is what I've been doing for 20 years. And now oh my God, like, oh my God, I'm so happy. But here's the next thing. Here's the next thing. I started working on the concept of TRADARS 3.0. Yeah. Yeah. That allows me time because this is like, oh my God, this is everything I've ever wanted. Everything. How do I take millions of data points and run it through a neural network to tell me exactly what I think? This is actually what I've built because in Aiden's brain, our large language model has been trained by me, and its entire focus is not to make a decision. Its entire focus is to answer two questions. What would Wayne think? What would Wayne do? And so then it filters everything through the macroeconomics and technical analysis and everything that I taught it, not ChatGPT generalization, but it filters it through. And then, so millions of data points that get answered, what would Wayne think and what would Wayne do? And I log in now, and from my point of view, it's extraordinary because it's true. This is what I think. And to hear it talk to me in the morning in my own voice is quirky, like strange, like this is what I think, this is what I do. And I feel it's amazing. So I hope you guys use it and like it. I think pricing it for free is a pretty good start. But now the next thing is, okay, now that I have that, I have a neural network, millions of data points, and in a millisecond tell you what I would think. Then how can I make it next level? What is the next level? I don't even know what that is. It doesn't exist. So this is pretty amazing. But it frees me up to do that. Yeah. All right, we'll do some technical analysis. What do you want to do? Some swing trading here? Okay. Neutral, neutral, bearish. Yeah, that's exactly what I think. In a situation like this, remember, I actually had to explain this to Aiden. So Aiden knows what I think. I explained it to him. In a situation that I see in Aussie dollar, what would Wayne think? I'm neutral to bearish. That is actually what I think. And why would I be neutral? Because price is below the moving averages. That is actually what I think. Do you see how weird it is? It's weird. Hey, Wayne, this is what you think. Yeah, that is what I think. Now, it's projected to fall. That's why it says chart. Bearish. I look at it. Yeah, I would project that to fall. On this time frame, I would. Now, where's it going to fall? Well, we're at 69.5. There's no doubt it has a high probability of dropping to 68, but it might drop to 66. 66? Even less than that. Well, when you account for, we're looking at 350 pip move. And I can do all of that in a second or two. So fundamentally, we're bullish on both of these. I get that. I already know that. We looked at the fundamentals. We looked at the scorecards. You know we're bullish on the US dollar. You know we're bullish on the Aussie dollar. I see all that right here. We're neutral. But right? So now you see how we did that. So we're neutral. And then I look at the chart. Well, the 21 is still technically above the 55. Technically, we could be bullish here. But since we dropped below the 55, all bets are off because the probability now of this reversing is much higher. Yeah, I know. It's already done all of that. So what's the target? 68.01 to 65.85, probably selling lower highs. So now I look at this horizontal dotted line, 69.37, where we are now. I'm thinking, let's do this in a pink color, I guess. I'm thinking beep, 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 beep. Okay. That's the first level of resistance. Beep, 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 beep. Oops, beep, 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 beep. That's the second level of resistance, right? So somewhere between those goalposts, what's the plan, Stan? The plan? Probably this. But it's already drawn it on the chart. That's what I would think if I was me. Holy smokes. Holy smokes. Okay. Yeah. Holy smokes, huh? Yeah, that is what I think. See, USD CAD with oil is complicated. This funding currencies, complicated. Hey, Greg. Well, better than Southern California, though, huh? 100% has to be imported. And Southern California used to be an oil producer and gasoline producer. Yeah. I love that old picture of, is it Huntington Beach? Let me, images.google. Yeah. Yeah. Huntington Beach. Let me give you two images. Images.google. Okay. I guess this one will be fine. Okay, Huntington Beach today. I put 2025. Okay, you see what it looks like? Beautiful, right? Okay. Huntington Beach used to look like this. How did Southern California become so rich? Look, that's the same beach, guys. Look at that. It's insane. The reason I bring this up is California shut down oil production, and even now their last refinery closed down. Yeah. Yeah, Greg's, if I was you, I'd get 2 e-bikes and a sheet of plywood. Turn them into a Tesla. Somehow just, yeah, hook them up together. You can put a bridle over each of the handlebars so you can steer it like a horse, a horse and buggy. Yeah. My God, though, huh? Where did all that oil go? Well, ask yourself, how did California become so filthy, stinking rich? Yeah. And so it's funny. Hey, Greg. Funny. I was listening to the news. Bloomberg. This was a couple of mornings ago. It was probably the weekend. And they were complaining because of their oil price, their gasoline prices getting to like $4.50 a gallon, something like that. And then someone said, no, well, it's not as bad as California. I was just in California paying, $6.50 a gallon. And then I'm chuckling because I'm like, I don't think we're paying $4. Yeah. And so to each his own, right? You're like, oh my God, $3.60 for gas? That's insane. And someone in New York is going, $4.60? That's insane. And someone in California, $6.60? That's insane. And then in Europe, they're like, good morning. Welcome to Europe. So anyways, eyeball this. Yeah, I have to work on that too. That's just so extraordinary. So do you guys like this tool? Are you going to use this tool? I'm zoomed in too much. Hang on. I think what I want to do. Well, great. California doesn't have any refineries anymore. The Valero, which is funny because it's near Vallejo, but the Valero one, which I just drove past a year ago, drove right past it. I saw it. I could smell it. It shut down, and the company moved to Texas. That's it. Okay. So California has nothing. So Australia is better off. All right. All right. I think what I should do here is have it build currency pairs for you. Unless you have a different idea. So like we would have this as the base. And then from that say, what should I be doing? Well, Aussie Kiwi. Now, we already have all this information other places. We already know Aussie Kiwi has the best score on the asset radar. But maybe we don't need it. Maybe we already have it. Okay. Well, then what else could we do? I could display this differently so that it's not looks like COT data, but I can do it so like gauges, or I can come up with different views. Do you guys have any idea? Just building a pair, but I think we already have that, don't we? I mean, that's how you use this. Biggest score, Aussie Kiwi, Euro Kiwi, Pound Kiwi. We're already doing it. Aussie CAD. Yeah, it's okay. See, raw. So like we're hey Wayne, how do you feel about Euro? Bullish. Hey Wayne, what do you think about pound dollar? Slightly up. Or pound, slightly up. I mean, how do you feel about Swiss? Bearish. Now remember, we've been bearish on Swiss franc for quite some time based on potential intervention of their central bank. Cool. Wayne, what do you think about Kiwi? Oh, I'm very bearish. Is that enough? Do you want more? Do you want it to do pairs? But I think it's kind of already doing it. Do you want it displayed differently? Do you want more than one visual? How can I serve you? I think I'm going to make this free for you as well. Look at this. This was updated 3 minutes ago. 5 minutes. Yeah. Oh my God. So cool. Yeah. Well, anyways, I think I babbled on too long. Oh my God. This is so good. I'm so happy. I hope you use the heck out of TRADARS. Yeah, I hope you use it. 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 This is what you need to trade better. Yeah, well, right. King says add another visual, but I don't know what that is. It's not that easy, right? Like, I'll come up with something. Yeah, I'll come up with something. I won't make it my biggest priority. I mean, this is the other way he's doing it. I didn't ask him to do it twice. Do you prefer the upper one or the lower one? I guess we're already doing this. And then what? What's he doing here? Oh, that's not actually bad. That's not a bad idea. So I've already done it. Interesting, huh? So obviously we need some more Kiwi, but maybe I don't have more Kiwi. Kiwi dollar. Yeah, well, we can do cross pairs, Euro Kiwi. Okay. We need to do that to get a better data set. I kind of like that. Pair breakdown. That's why you did that. All right. That's why you did that. But why can't you combine these? Why can't you just click this? Why do it in two? See? See? This is good. We're brainstorming together. So I like this drop down feature, but it should just be here. All right, whatever. I'll work on it. Meanwhile, don't forget tradars.com. Okay, you can sign up for free. This is where you log in if you already have your paid or free account. You launch here. We have our live webinars here, our recording here. For example, I have today at 4 p.m. a webinar. Cool. Yesterday, from 8 to 9, Meta led an event, and the recording is right there. Brian's going to lead one on Friday, I believe. Cool. Anyways, cool. I've got to work on this because we finally got this up and running and working properly. So, okay. But you can plan your week and you can plan your day. Cool. Lots of potential. Lots of potential. So I got to work on that. But at this point, I'm not fixing. Everything's working pretty amazingly good. I'm very, very, very happy. In fact, I feel liberated by version 2.5. So now we can do the fun stuff. Brian, you go here. Let's see. Wait. Yeah. Wait. Wait. Am I logged in the proper guy? I might be in the wrong account. Even I'm in. I don't think I'm. It's logged me in a different account, I believe. Because usually. Yeah, I'll have to see where they've put things. I don't know if I'm logged in properly. Yeah, okay. Maybe they have changed something. They meaning support. So it should be there, but it's not there for me either, right? So let me work on it today. This is good though, like, because now we're going to get them all set up. I got to take down all of mine because they won't record, even though support has worked on it. So I'll destroy all of that. I'll make new ones. So obviously for me to do that, I'm going to need to figure it out and then tell you. Okay, Brian? Cool. Yeah. Yeah. And there's a lot more crypto assets for you as well. Since you're doing crypto,
Good morning, Aid.
Oh, that's interesting. Interesting, really? Must be doing an update. So anyways, lots more there. So anyways, peace on earth. May the pips be with you. May your profits be above average.